Hello, ladies and gentlemen, dear friends. Good afternoon. My name is Belén Arribas. I'm a senior counsel and president of IFCLA. Welcome back after lunch for this thrilling session on the European blockchain ecosystem, featuring today my esteemed colleagues and friends, Victoria Gago, co-CEO of the European Tech School and European Blockchain Convention, José Ramón Morales, partnered with Garrigues, and Jesus Ruiz, CTO and member of the board of blockchain ecosystem. Of Alastria blockchain ecosystem. I will introduce them all properly in the next few minutes. As we have limited time for this session, we'll have just 1 hour. I have agreed with my panelists that they will do their best to keep their presentations short or as brief as possible, in order to give them a few minutes in the end in order to take Q&A from the audience. Without further ado from my side, I would like now to give the floor to Victoria. Victoria Gago, as I was saying, is the co-CEO of European Tech School and European Blockchain Convention in Spain. She's a director of the OBS Business School Entry Points Master in Blockchain. She's a member of the advisory board of Blockstart, an accelerator founded by European Commission. Previously, Victoria had worked as an M&A director at WinCorp Translink in Spain and as an investment analyst at Black Toro Capital private equity fund in Spain. She was born and raised in Copenhagen. Currently, she is based in Barcelona, Spain. She's Master of Sciences in Financial Management from the Sheffield Hallam University and BA in European Studies from Copenhagen Business School. She will be presenting today on the European and global blockchain ecosystem. And so she will be speaking about their work with the European Blockchain Convention from 2018 and the trends they have seen, including the talent gaps that they have found and the role of tech schools in order to fill that gap. She will be discussing again as well regarding the startup scene and the founding rounds in this ecosystem. And finally, she will be covering the crypto and financial sector at global scale. Victoria, thank you very much for accepting our invitation to speak today. The floor is all yours.
Thank you so much. Thank you very much, Belén, for putting this together and also for the nice introduction. So yeah, hello everyone. Nice to meet you, or at least see your names here in the chat. I'm now gonna share my screen. So hopefully you can see my presentation. Do you see it now in full screen?
Yes, we do.
Fantastic. Okay, yes. So my bio, thanks to you, Belén, it's over. So we can stick into the presentation. Yeah, so basically back in 2018, my partner, Daniel Samaron, and myself founded European Blockchain Convention, which is one of the leading blockchain conferences today in Europe. And basically what our goal was to connect the European blockchain ecosystem to make sure that people through our conferences and events would be able to find what they were looking for. Could be a new employee, a new partner, a new client, or just learn through the content. So yeah, this is a bit like the evolution. But yes, I said we started back in 2018, physical event in Barcelona. Then we had another event in Copenhagen the year after, 2019. Then we managed to have another physical event in 2020 where Belén was also speaking, before we knew that COVID was just around the corner. And then from there, we had to switch to online events. So we have done 2 online events and now working on our 6th edition, which will take place in December. Then one thing we saw very clear through our events and through the ecosystem was that there was a huge talent gap. A lot of our attendees and members in our community was asking for education. So basically what we've done this year as something completely new is to launch European Tech School, where we are offering courses, blockchain courses, both for business and tech profiles. Very much focused on giving the students access to a background in blockchain, to figure out how they can work with blockchain, if it makes sense to work with blockchain in their case, and also to be connected to real professionals in the blockchain space, because basically all our professors are professionals working with blockchain technology on a daily basis. So this is the European Tech School. Some of our professors, as I said, all of them are working on a daily basis with blockchain technologies. So this is really also a way for us to provide value to the students and access to real life problems, opportunities, and projects. Basic, that's it. So we have currently 2 courses. I'm going to also share a link if you want to have a look at it. We have our blockchain executive program, which is a five-week program, and we have our certified blockchain expert program, which is a 10-week program. I'll share a link later. And in terms of our evolution, we started, as I said earlier, back in 2018. We were 500 attendees, and we are now expecting to be 2,500 attendees in December, which also reflects how the industry actually, we're talking about plenty of industries in the blockchain space, how they're getting more and more involved, how more money and human capital is going into blockchain. So for us, it's an honor to be in this space. So now let's talk a little bit about like the startup and also funding scene currently in the blockchain space. This is I mean, you can see here like a global situation when it comes to unicorns. And you can see currently we have almost 1,000 unicorns on a global scale. It's not in the crypto space, but it's just to show you that when it comes to unicorns, the number is growing. That's it. So this one is quite interesting. You can see here how the growth is also being reflected when it comes to unicorns in the blockchain crypto space. So currently in 2021, we have 136 unicorns. And if you go back to 2020, we had more, it was more around 20, 30 unicorns. So this is an increase almost of 5 times. Not bad. And again, it shows how much money and how much effort is going into the space. And again, also a need of talent for the space, because this is basically just the beginning. I mean, this is day 1. So let me go to next slide. Also, when it comes to funding, you can see that in the first 6 months of 2021, the blockchain startups have raised a bit more than 7 billion versus 2.8 billion in 2020. So again, it reflects how the industry and how the space is growing. If this is going to continue in this speed, you can see that the expected funding for 2021 will be almost 15 billion. Not bad. And here you have 17 of the 20 largest VCs that have invested in blockchain on a global scale. So I'm sure maybe you know some of them, maybe Andreessen Horowitz, one of the most famous VCs currently we have on a global scale, Sequoia maybe, Axel. And also you can see the asset under management they have here. Cool. So here, so blockchain tech has never been hotter, as you can see. And what's quite interesting also now is, well, to see how, yeah, we're not just talking about crypto and blockchain startups, but also now moving into DeFi, decentralized finance, and NFTs. On this photo, you can see 80 of the largest blockchain companies currently in the space. Yeah, if you know a little bit the space, maybe you know some of the names. Consensus is probably the best well-known company. It's in the corner here. It says infrastructure and development. It says Consensus. Maybe you know that company. But yeah, you can see, so it's everything from custody wallets, exchanges, mining, infrastructure development, RegTech, capital markets, payments, tokens, gaming, and so on. Yeah. Also recently, Facebook announced, I think it was last week, that they are going to launch a 50 million fund to build the metaverse. Basically, the metaverse, I'm sure in the future will be kind of like, yeah, another level of the internet. So now, I mean, if we think of the internet, we have plenty of websites and plenty of, yeah, websites basically. And in the future, what we will see with the metaverse is, yeah, basically a place where you can have like your online life through a game or through different kind of activities, and you will have your digital assets and so on in this metaverse, which will be, yeah, which will be, it won't just be one metaverse. It will be like a mix of like different universes, basically. Yeah, and here you can see more than 90 companies building stuff when it comes to the metaverse. So also a lot of things happening there. And many of the VC funds you saw on a previous slide has been investing in these companies. And even many of these projects don't even have equity. So what we're seeing now is that the VCs are investing in the tokens. So this is also quite interesting, a new way of investing for institutional investors. Yeah, and here you have like the Europe's biggest blockchain startups. Maybe you know some companies, not, but at least you have an overview. Yeah, and here this is a study. I'm also going to share in a bit the link to this study. So Finder.com published this study in August. So yeah, so a little bit more than a month ago. And basically they did a study to figure out the percentage of citizens who own cryptocurrencies in these countries. So the study only included these 27 countries. So you can see from more like kind of third world countries, Vietnam, Indonesia, India, and so on, to including several European countries, also like South Korea, the US, and so on. So yeah, so for example, the US has 9%, basically 9% of the citizens in the US hold crypto. That could be everything from like $5 to millions of dollars. In Spain, for example, we have 12%, Singapore 19%, Netherlands 20%. So yeah, I mean, what we can see is that the adoption of crypto is also growing, which is also leading to more like we're getting more like a focus on blockchain technologies in general through the growth in this space, in the crypto space. Yeah, and here this is, I think it's quite funny. So basically back in 2017, I mean, there was a very clear rejection from the institutional side when it comes to crypto. So this is an article from CNBC. So Jamie Dimon was saying, the CEO of JP Morgan, yeah, basically 4 years ago, that that Bitcoin was a fraud, and that it would eventually blow up. So yeah, so that was a clear rejection towards crypto back in 2017. What we saw in 2020 was basically a slowly acceptance of crypto, both from a lot of like commercial banks and also like large institutional investment funds. So yeah, so this is an article from just a little bit, well, almost 2 months ago, that basically JP Morgan is now launching different services for the private clients, high net worth individuals, so they can invest into crypto. So quite interesting, right? That we moved from like this, like, fraud situation to, to getting slowly into the space. As I said, they're only offering these services for their private clients. So it's not, it's not something that most of their clients have access to, but still, it's interesting to see. I'm also going to share this link later. This is basically, it's called bitcointreasuries.net. This is a place where you can see the holdings of Bitcoin in different listed companies and also private companies and even public, like more like kind of on government level. So it was also quite interesting to see in 2020 when MicroStrategy, listed company on the NASDAQ, they started to invest and get basically Bitcoin on the balance sheet. So they currently have, well, actually, this is recently. This is very, very precise. So more around how much is it? 5.4 trillion. Billion in the balance sheet. You can see that Tesla is also holding Bitcoin, Square, and some other companies. I will share the links so you can have a look at this as well. And I think this is also quite interesting. So we've had this NFT hype the last 6 months, especially. So basically, NFT. It's basically it's a way to connect some digital assets, could be like a piece of digital art, with the blockchain to prove that this is like the only copy. So this NFT is created by an artist called Bibble, and he has been doing one piece of digital art throughout 5,000 days. So this is combined by 5,000 small piece of digital art and put together, and he sold this some months ago for almost 70 million. So also quite interesting evolution in the space. Also Visa, as a, I guess we all know, went into the space and bought one NFT for 150K. I mean, they didn't invest too much, just 150K, but still interesting to see that Visa, and this is actually their own official Twitter post announcing this. Yeah, and actually one of the most expensive NFTs within this collection called CryptoPunk, which is also, Visa got one CryptoPunk NFT for 150K. The most expensive one was sold for almost 12 million. So yeah, interesting what we're seeing. And I kind of wanted to give you like a quick overview of what we've done within the blockchain space in Europe with the European Blockchain Convention and European Tech School, and a bit like the startup, seeing the funding, what's happening, and also when it comes to financial institution, what's happening there, and in the crypto space. So I'll share now 3 links, as I promised, to the crypto report and to the Bitcoin treasuries overview, so you can see the companies who have invested in Bitcoin or have Bitcoin on the balance sheet, and also to our school. Yeah, and here, if you want to connect, this is my Twitter, my LinkedIn account, and my Gmail. So I hope this was more or less 15 minutes.
This was excellent, Victoria, right in time, and fantastic and enlightening presentation. Thank you very much.
Thanks to you, Belen.
Now over to you, Jose Ramon. Jose Ramon Morales is a partner with Garrigues. He's the head of tech and outsourcing group at Garrigues and co-head of Garrigues Digital. He focused on corporate, regulatory, and transactional aspects in technology and digital business projects, M&A and VC investments in technology and digital business companies. He's secretary to the board of companies working in the technology arena, including VC funds investing in the tech industry. He's a former member of the board of IFCLA legal committee of the Spanish Digital Economy Association as well, and he's the promoting team of Alastria blockchain ecosystem. Jose Ramon will share with us a brief summary of the most relevant aspect of two essential regulatory initiatives affecting digital finance at the European Union level. Proposal for regulation and markets in crypto assets, the so-called MiCA regulation, and the proposal for regulation on digital operational resilience from the financial sector, the DORA regulation. MiCA aims at establishing regulatory framework for certain kind of crypto assets and certain services related to such crypto assets. And DORA proposal pushes to consolidate and upgrade ICT risk requirements across the financial sector. Again, Jose Ramon, thank you very much to you for accepting our invitation to speak. And now it's over to you.
So can you see the screen?
Yes, we can.
Okay, excellent. So Belén, thank you very much. I'm really happy of sharing this presentation with all my colleagues, and especially appreciate the invitation of IFCLA to this presentation. Well, yes, I would like to make a very quick review of what's going on with new regulations, which in most of the reasons for such new European initiatives to regulate technology aspects rely on this evolution of the last few years about the blockchain, DLTs, and those digital assets called crypto assets. So the framework in which it happens is basically something called the digital finance strategy. Digital finance strategy was announced by the European Commission last September 2020, and as a part of this digital finance package, which is the result of certain consultations and analysis made by the European Commission, they consider that it's important to generate a new framework which gives solutions, or at least address certain aspects that were not properly regulated, especially in the area of the digital finance, anything related to fintech and some other phenomena that are currently in place. They are increasingly important for rendering services to the companies and to the end users, but they were not properly regulated, so they considered that was very important. And part of the tools that were designed to be implemented were those two regulations, meaning, of course, that they should be applicable directly to each member state. The one related to marketing crypto assets, the so-called MiCA, and the digital operational resilience for the financial sector, DORA. Basically, as a leverage for the new evolution of the digital finance. So in this environment, you can see here more or less which are the objectives of such strategy. We can skip it a little bit, but basically facilitating digital innovation in financial services while addressing the risks associated to such new way of delivering services and new business models. So it's some kind of balance to avoid that the old rules are not blocking innovation, but not applying rules, generating new risks that are not duly addressed. Basically, this is the idea behind it. So in this idea, one of the areas in which the concerns of the Commission were really focused was related to the crypto assets. And crypto assets, as you well know, and as Victoria explained to us, is something that is in the recent years has been something really in the conversations of many people, but also in the agenda of regulators, and even in the strategies of increasing the number of companies, and as Victoria explained very well, even in the strategy of investing the funds of large companies and investment funds. So since it's no more a romantic idea, but it's a phenomenon that is really coming really pervasive. Finally, it was necessary to say something from the regulation, and the European Commission always say, be careful, if we over-regulate, we can kill the innovation, but if we under-regulate, we may leave some risks without coverage. So what's the background for this? Of course, crypto assets have been in the last few years, not only in Europe, but also in some other countries, and especially in the United States, but I would say that the big economies been the object of concern to the extent that they were some way being used for raising funds as financial instruments without giving the adequate legal coverage. And in Europe, this coverage for financial instruments was and is today traditionally covered by three big frameworks. One is Marketing Financial Instruments Directive, or the package, which basically establishes the obligations related to the commercialization of certain financial instruments, the adequacy of the profile of the investors to the risks associated to such investments. The prospectus regulation, which is basically addressed to give transparency to the risk associated to such investments when they are offered in the market, is a public offer, and the market abuse regulation. And this is something which is in place today. And MiCA, as you will see, is not trying to replace, but probably to complement this. And of course, because depending on the kind of tokens or crypto assets, the function might be not raising funds, but being used as a payment instrument. We have the Payment Services Directive, we have the Electronic Money Directive, which are also frameworks that can be complemented when we are using a new way of instruments that can be used for payments or as electronic money. And at the end of the day, the idea is to check whether such framework is enough for regulating, or it's necessary to add something else. There's another relevant regulation, which is already covering the certain services related to crypto assets, is the fifth AML directive, which is expressly covering the certain services of custody, of wallets, crypto wallets, and certain activities of crypto exchanges. So this is partially regulated, at least for the applicability of the AML obligations. But of course, there's no global regulation trying to cover the different aspects of crypto assets and the services associated to them. So what's happening in the last few years that generated this urgency in trying to give a framework in Europe? Basically, I think that the Libra proposal, now called DM, the Facebook initiative for launching some kind of stable coin, which is really seemed to be very powerful, and the potential implications on the financial stability, on the way of a lot of market aspects might be affected by such proposal, generated a concern about whether or how to regulate such kind of phenomena. Financial entities increasingly gaining exposure to highly volatile crypto assets. It's not only consumers, that might be exposed to such risk, but also large companies and even investment funds putting their monies in such investment, which might be damaging or putting in risk certain prudential precautions about such financial entities. But in general, high regulatory uncertainty. We've seen last 5 to 7 years discussions about what a token is, whether or not it's a security, which is the classification, and which is the way we can identify the functions, the types of crypto assets. And we've seen also an increasing adoption of local regulations in each member states trying, or certain member states trying to give a solution to such regulatory challenges. So in this situation, and if you add to this the consumer protection needs associated to certain frauds that started to appear, the result is the European Commission wishing to give some framework to this. And this framework is under construction. This is not in force. This is in the process of review, of gathering opinions and getting materials for building the whole framework. But it's an effort. It's a very large regulation. The proposal is a very large regulation trying to cover a lot of aspects. Maybe it's wrong. The way they are doing might be, you might consider that it should be different way, but it's a very interesting effort, which raises a lot of discussions, which is what we need is to discuss on the implications and which are the best solutions to keep this balance between protecting innovation while protecting the interests of the public interests that should be addressed. Okay, so main point in this regulation is the concept. Of course, this is not neutral. This is an option. Is how to clarify which is a crypto asset under MiCA. So this is the definition contemplated in the current version of MiCA. It's a digital representation of value or rights, which may be transferred and stored electronically. Well, up to this point, it might be securities represented electronically, so that's it. But what is additionally additional feature here is that is using DLT technologies, distributed ledger technologies, or similar technologies. And if you go to the definition of the distributed ledger technologies, you find the word cryptography. So basically, there's no neutrality about the technology. Technology, it's specifically talking about a family of technologies. The question is to which extent it's necessary to open up a little bit this definition to, although we have or similar technologies, but we have DLTs, we have crypto. So it is something to be discussed further, whether or not this concept of crypto assets, today probably it's capturing a lot of the existing ones, but it might happen that it's sooner or later keeping a little bit tight. But the proposal of this regulation is giving more legal certainty. As we said, there were a number of initiatives in member states that were trying to make their own regulation. So it's trying to give an homogeneous regulation. But also, as we said, market integrity, financial stability, risks to monetary policy. So we are not talking about questions that are today normally regulated by local laws, but they are normally regulated at the level of the European Union and supervised by European Central Bank or other large supervisors. So this is something which goes beyond the scope of the normal way of doing of member states. It's going beyond. So the way it's trying to regulate is establishing requirements both for issuers of crypto assets in the territory of the European Union, and also to certain crypto assets service providers when they intend to provide services in the single market. And this is basically the idea behind this. So how is it done? Well, basically, the central concept is, and this is interesting because it's a question that may affect to decide whether or not this applies to Bitcoin. The proposal applies to persons that are engaged in the issuance of crypto assets or provide services. So it's addressed to entities or persons, but it's not addressed to the assets themselves. It's addressed to persons imposing obligations or requirements. So the big question here is to what extent in a decentralized protocol, a protocol working in a decentralized system is really able to be imposed obligations as they are written in the MiCA proposal. So the way they are trying to do is there are rules to crypto assets that belong to the world or are similar to payment instruments and e-money. And there are rules also applicable to all crypto assets that are not already covered by the existing financial markets legislation. So it's trying to widen the scope of the financial way of regulating beyond what is normally MiFID. So that's why even the name is quite similar. It's MiCA is similar way of expressing the name. MiCA is marketing crypto assets. MiFID is marketing financial instruments. So it's a parallel treatment. And some of the obligations which are imposed on the issuers and especially to the service providers are quite similar to the ones that are imposed to their similar positions in MiFID legislation. Here you have a map of what's the way it's covered. So the issuers of crypto assets are imposing transparency and disclosure requirements. The issuers of certain kinds of crypto assets, which are those that are asset reference tokens and money tokens, and as well as crypto asset service providers, are subject to authorization and supervisory powers. Issuers of the same kind of crypto assets and service providers are also subject to operation, organization, and governance rules, as they are the ones that are operating in the financial instruments field. The issuers of crypto assets and crypto asset service providers are subject to obligations related to consumer protection, because all of them, the three kinds of crypto assets here contemplated are potentially generating damages to consumers if they are not properly distributed and marketed. And finally, the crypto assets markets need to have measures to prevent the potential market abuse. So it's in some ways similar to the MiFID and the regulation regarding the financial instruments. Here you have some kind of map again about not all crypto assets are subject to MiCA. So the important point here is to understand that the three ones that are covered by MiCA and regulated by MiCA are utility tokens, asset reference tokens, which might be significant or not, depending on the size and the way they are distributed, and e-money tokens, and they are the ones that are expressly regulated as subject to the regime affecting the issuance, the issue and distribution and admittance to a trading in a platform when they are subject to MiCA. On the contrary, the financial instruments, those tokens that are normally considered financial instruments because they fall within the definition of financial instruments, even if they are represented digitally and they are stored and transferred through a DLT or similar technology, they are not covered by by MiCA, provided that they are already regulated in MiFID. What is done by the regulation, the MiCA regulation, is to amend certain articles of MiFID in order to be sure that MiFID properly regulates the security tokens. So security tokens are outside MiCA. They fall within the MiFID regulations, the prospectus regulations. So the traditional position of the securities market authority saying that they are the supervisory authorities and they will enforce the same obligations, the prospectus obligations, the duties of the issuers, etc. That's the same, that's similar. So it's not affecting how security tokens should be treated. So MiCA is not entering in this, okay? Similar with CBDC. So those crypto assets issued by central banks when they are acting as monetary authorities is not captured by MiCA. MiCA is excluding this expressly. And of course, securitizations, deposit and structured deposits in money, and tokens issued by certain institutions, insurance companies, European Central Bank, European Financial Stability Institutions, public international institutions. So those are not covered, not regulated by MiCA. So whatever is said here about the authorizations required to issue tokens or the obligations to prepare a white paper or whatever are not affecting this list of things. And what about Bitcoin and similar coins which are generated by a protocol? It's not a person who is issuing Bitcoin. So to the extent that MiCA only applies to the issue of by persons, by issuers that are persons, it's not applicable to Bitcoin or similar assets, but MiCA applies to the services affecting to such crypto assets, meaning custody of Bitcoins, of course, is subject to MiCA because it's a service, it's a crypto asset service. But of course, the mining of Bitcoin is not subject to MiCA. Okay, I think it's quite clear. So we have here the definitions provided for utility tokens, asset reference tokens, e-money tokens. I think that you can read it and you're probably familiar with that. It's again, you can discuss whether or not they are fine or they should be refined to properly capture. But basically, those are the ones that are under the regulation. And this is the map of how the regime applies. So basically, for utility tokens, the issuers of utility tokens are not subject to prior authorization. So any entity could be issuing this without obtaining any authorization, but needs to notify the authorities the white paper which is prepared. And there are certain transparency obligations to provide. And of course, the white paper should be prepared complying with certain minimum requirements about the detailed description of the risk, of the rights, of the potential risk of not providing. For example, in a utility, there's a very recent case in Spain of utility token white paper saying especially that there's a risk, of course, that this utility token cannot be used because of the project not being successful. So, and this is something which is required by MiCA. MiCA requires you, if you are offering a utility token, you might warn your potential subscribers or token holders that this project might not be successful. So the tokens cannot be used for the purpose they were issued. So this is the kind of questions, but most of them are related to transparency for utility tokens. Okay. For asset reference tokens, authorization is required by a national competent authority for the moment of the issuance. It's not possible because the asset reference tokens have a number of implications, and there's a number of supervisory concerns even about the prudential supervision of those entities issuing such assets. Then there's a process of control of the ability to issue such asset reference tokens, including stable coins. Or otherwise, it's also possible in case it's a credit institution who is issuing such tokens. Okay. And about the white paper, it's necessary to obtain authorization because it's a white paper, which might imply, of course, greater risk. That it's important for the authorities to such risk being properly reflected in the white paper. Okay. And finally, I'm sorry because I'm not seeing the screen. Okay, and for e-money tokens, yes, for issuing e-money tokens, it's necessary to obtain an authorization, normally by as a credit institution or an electronic money institution. But here, it's not necessary to get an authorization for the white paper. It's similar to utility tokens. It's purely a notification of the white paper to their supervisory authorities. And finally, for service providers, so the crypto asset service providers, there's a list of services we'll see later on, and all of them, they need to obtain an authorization to provide such crypto asset service to the public in the European Union. This authorization is granted for the whole territory of the European Union. It's not only country by country. And this authorization is not necessary in case the institution which is providing the service is a credit institution or investment service entity. So this is more or less the map of the regulation established in the MiCA. There's a number of slides which are more detailed. I'm not having much time for that, but you can take a look on them and we can discuss. There's a number of requirements, basically of transparency, but also in some cases of ongoing requirements about on funds, asset reserve of assets, especially for the crypto assets, the ART. But in general, there are similarities in some way of the kind of regulation there's for MiFID, especially for those issuers of crypto assets that are having more concerns in terms of their potential impact in the economy and the financial stability. Finally, there's the list of the services, crypto asset service that are subject to authorization. You can see here the list: the custody, the operation of trading platforms, the exchange of crypto assets, either for fiat currency or for other crypto assets. Execution of orders, placing of crypto assets, provision of advice. So this list of activities is subject or might be subject to authorization on a European-wide basis to provide such services. Although such service, as I mentioned, is not necessary to obtain authorization for banks, for credit institutions, or for investment authorities. For investment entities. And for DORA, I'll give you a very, very quick view. It's basically a question about how to establish a stronger protection for the financial services, but not only for the providers of financial services, but also to the entities that are providing services to the financial entities. For example, the large IT service providers, but also to some holders of financial information, for example, renting agencies or some others, audit firms, a number of, so they are supposed to have similar resilience requirements that those required to the financial entities themselves. This is also applicable to crypto asset service providers, and that's why to the extent they are third-party service providers. So it is something that is applicable also to this idea of the blockchain to be used as a technology or DLTs for the infrastructures or the legacy systems, replacing part of the legacy systems of the financial entities. So sorry, because I spend much more time than expected, but I think that Jesus has a lot of things to say. Sorry for taking much time.
Jose Ramon, no problem. I didn't want to interrupt you because I was conscious that you had a lot of very interesting topics to discuss and to share with us. It was really fantastic and thorough presentation on both applicable and current regulations and upcoming regulation impacting the digital finance. Thank you very much for the presentation. Now over to you, Jesus. I would like to then properly introduce Jesus, and Jesus, you will have your 15 minutes. I'm confident that we will be able to take some of the time that was scheduled for the coffee break or the pause. So don't worry. I think we'll be fine if we took the 15 minutes that were promises. Even better that we don't have, or at least I'm not seeing Q&As coming through the Q&A function. So I give it over to you, Jesus. Jesus Ruiz is the CTO of Alastria Blockchain Ecosystem and a member of the board as well. He participates in the technical governance of EPSI, which stands for the European Blockchain Services Infrastructure, both at the European Commission and a member state level, and in LATChain for the Inter-American Development Bank. He inspired the public permissioned model followed by those networks, where the centralized government and SSA are technical components. Jesus will describe the EPSI, the European Blockchain Services Infrastructure, in particular the objectives and the problem that it is meant to solve. He will cover as well the current status and next steps. And finally, he will be dealing with some techno-legal issues related to the decentralized governance model that EPSI is implementing. He will also be describing the relationship with other blockchain networks, especially with emerging national blockchain infrastructure. So with this, Jesus, again, the floor is all yours. Thank you.
Okay, thank you. So if just 1 second, screen, let me share the screen. And then if you can confirm that right now you see my screen.
We do see it.
Okay, so thank you very much for inviting me to this event. And then let me start very quickly. So EPSI, first let me put the laser on. Yeah. So EPSI is a joint initiative from the European Commission and the member states to deliver European-wide cross-border public services using blockchain technology. The main objective of EPSI is to enhance the provision of cross-border services, including the mobility of citizens and enterprises. And at the same time, it will be a key enabler for the digital transformation of the whole European economic area. The network and the initial use cases are approaching production state, which is planned for the end of this year, 2021, but maybe better for the beginning of next year, 2022. And you can see here that right now there are 38 nodes, okay? 21 countries participating, and then depending on the country, you may have more or less nodes. So this is not an association. This is important. This is an actual network, and the name is European EPSI, European Blockchain Services Infrastructure. So this is a service infrastructure for being able to deploy and provide services across borders. Now, these are the use cases currently being implemented in EPSI. And one of them is much more than a use case. The European Self-Sovereign Identity Framework, or ESIF in short, is a key enabler for all the other use cases now and in the future. And I will talk a little bit about this later. But this is the European Self-Sovereign Identity, which, as you can imagine, identity is a key for any other use case that you want to implement. Now, there are new use cases which have been already accepted, but not so mature as the other four. So you have asylum processes, European Social Security Identification Number, and then a small and medium enterprises finance. Okay. Now, well, this is a little more about the diplomas. Okay. In bold, the functionality in the first iteration. Diplomas is not just a use case is also something that can be generalized in general certification, any certificate that is issued by an institution to a holder, and then the holder has to prove something about himself or herself to another institution, can be implemented as a type of certificate or diploma. So the diploma can be generalized to many use cases, which are useful in the real economy, okay? So a common thing that we see in the European blockchain services infrastructure is the focus on the real economy versus the financial economy. Okay, so all cryptocurrencies and most of the focus is on the financial markets. Okay, but the real economy is the part of the economy that produces goods and services rather than the part that consists on financial services such as banks, stock markets, etc. And this is the most important to the people. The people have to be in the middle of everything, the households. Okay, and I have specifically painted in blue the arrows that I personally think are more important to the citizens, okay? So financial markets are part of the economy, but that's not the real thing. So the fact that somebody sold by 20 million some NFT, which is not related to the production of things which are like food, electricity, housing, dresses, and so on, the things that are essential to human lives, okay? Well, that's not very important to people who don't have money to invest, okay? They have to survive. So this is the real economy. This is the real things that where we all have to care and where we have to apply, let's say, the real blockchain, okay? So it makes sense because in general, the quality of life for Europeans, as I said, is very correlated with the gross domestic product, the GDP, of the region, the real economy, and the efficient and transparent functioning of the public administration, which is also important, okay? So a common theme in the blockchain space is we have to decentralize this, we have to decentralize that, but the real economy is already very decentralized, sometimes too much decentralized. And in reality, we need the blockchain to coordinate efficiently all the activities of many different independent and autonomous entities. There are 13 million businesses in Europe, and billions of euros can be saved and productivity improved if coordination is enhanced. And there are 140,000 local administrations, okay? And they all have some autonomy on the behavior. They have to be coordinated. And that's the major problem in an economy like, or a space like the European Union. And if we speak about public administration services, okay, probably the problem is that it is too much decentralized and it is almost impossible to coordinate actions in a fast and efficient way. And blockchain can help, but nothing related to speculation or the NFTs that we have already seen, okay? Everywhere where we look and scratch past the surface, this is the end consumer. And most things on the crypto space are related to the end consumer. And for a reason, okay, because the consumer is at the end of a very complex chain. Well, actually, it's not a chain, it's a network. And this is where the real economy is done, okay? So everywhere where we look and scratch past the surface, we see coordination complexity that the blockchain can help reduce. Actually, this is a very simple taxonomy of blockchain applications. Notarization or certification is basically about the proof of existence in the past of an object external to the blockchain, like a diploma or most of the credentials or certifications that are needed in real life. For example, in order to enter Spain right now, you must prove that you took a COVID PCR test or that you are vaccinated and that it was negative in the case of the PCR or you have completed the 2 vaccinations, okay? This is a certificate. And this is a problem of having interoperable certificates across borders. And the centralized workflow is a generalization of notarization in the sense that it registers what each entity says about something done outside of the blockchain. And all such notarizations are tied together. For example, food traceability. Exchange of digital value is the most difficult problem to solve. And this is where all tokens happen and involves the change of ownership of a good where the good and register only exist in the blockchain. So it's purely digital. And this is the problem that Bitcoin tried to solve, okay? Something which is not obvious at first sight is that if the object is real, that is belongs to the real economy and has an existence outside of the blockchain, its change of ownership can typically be implemented as a decentralized workflow, and we do not require the complexity of the exchange of digital value or tokens, by the way. Okay. EFSI is implementing something for the real economy, of course. Okay, and it's being implemented not as a blockchain as a service, but is implementing a decentralized governance model, or DGM, okay, decentralized governance model, encoding the operational rules required to ensure that the trust and resilience of the EFSI network complies with the aims, strategy, and rules of the member states and the European Union in general. And the rules are very strict, ensuring that the network is not controlled or dominated by any single entity, not the European Commission, not a provider, nothing. So it's a collaboration across member states together with the European Commission to operate an efficient blockchain network. Okay, and this is the same as happens, for example, with other national networks like Alaska, etc., but with different participants. Now, one special note about the legal instrument supporting the governance model, okay, because there is not an operator. So this is not a typical cloud operation. This is more like the internet, okay? So the DLT node consortium agreement will be a multi-party agreement where the execution of the consensus algorithm is a kind of consortia. So there is not a real consortia, but given the consensus algorithm of the blockchain, this will have an entity which will enable the definition and execution of SLAs, service level agreements, and so on, okay? But it is very important. There is not a central entity operating the ecosystem because the network is operated collaboratively by the participants. This has a lot of implications on the legal issues because we are not used in the let's say in the real economy to this type of things, except with the internet. But the internet is assumed and nobody looks at how it operates. So the blockchain has to operate exactly like the internet. Okay. Now, but EFSI aims to be able to deliver cross-border blockchain services to millions of citizens, businesses, and public administrations without compromising scalability, sustainability, or security. And the Commission and the governments in EFSI have already realized that there is not any blockchain technology ready for implementing those ambition objectives, not yet. So they have launched a pre-commercial procurement process to progress beyond the state of the art, because the objectives cannot be, again, implemented with any blockchain in the earth right now, okay? So we need high volume velocity of dealing with new types of use cases, involving a high number of digital objects or digital representation of objects, okay? And digital twins. And the associated improvements also needed on identification, traceability, exchanges, and management of data, and so on, okay? So high velocity. Now, some use cases. You can see that the circular economy, the green economy, and so on is also at the center of the strategy of the European Union, and is at the center of the strategy of the blockchain network in the European Union, because we need an efficient way to support the circular economy and the green economy and the Green Deal, okay? But you see here digital product passport, tracking, traceability, proving the origin of something, item tracking, and management of IP rights. So you see here these notarization use cases, okay? Some numbers, okay? In just one of the use cases, in the circular economy, we have to support, of course, 500 million people and 30 million businesses. And we need 25 million new product registrations each minute, okay? You have to take into account that right now, compared to Bitcoin or whatever, this is enormous amount of transactions per second, okay? 15 billion total transactions per minute, both read and write, and 120 trillion updates over the course of 1 year. So there is no way, if we want to use the blockchain to the real economy, and not just for cryptocurrencies and crypto assets and the financial market, we need to support this type of use cases, okay? And by the way, all the use cases have a thing in common. They need an identity system for natural, juridical persons, and also for things and processes. And this is where the new self-sovereign identity coming from EFSI enters, with all the legal support of EIDAS2 and so on. So this is coming. This is coming very fast, okay? And by the way, this identity is also a type of notarization because there is no exchange of value. You don't exchange tokens, okay, with the identity, but there is a proof of existence of something in the past, something which is the attributes, okay, what you can do, the title, the diploma, whatever, what are you, and so on, okay? Okay, this is coming.
May I interrupt you? Sorry to have to. I just been warned by the organization that they will need to close the session in 2 minutes. So at 15 past, because they need to connect the following session. So if you're able to do that part in 2 minutes, I would be very grateful.
Less than that. Okay.
Thank you.
Very soon. Basically, this is how I see the future, because the future is a network, interoperable network, where you will have EFSI here as a backbone for other national blockchain networks, other blockchain networks which are private or whatever. And then in order to cross the borders of technology and the borders of countries, you need a trust framework, which is going to be provided by EFSI and specifically by the EFSI identity system, okay? And then also that not only at the physical level, but also at the private and public sectors, okay? We need collaboration, not just on the use cases, but also on the infrastructures, okay? And this is exactly, and this is the last slide. I have talked about EFSI, but then you have Elastic in Spain, you have Blockchain in Latin America, you have IPSI in Italy, you have another national network in Slovenia and so on. All of them have the same model, a common mission, a common rules, and we are doing parallel collaboration, because the network of networks of the internet will have a network of networks of public permission blockchain networks when you have to solve the real problems in the real economy. And that's it.
Thank you very much. Jesus, I'm really aware that you had a lot of more interesting things to tell us. Anyway, thank you very much, because this thought-provoking presentation of yours as well. And thank you very much to everyone. I think the connection is now over.